Well, this week, the Federal Reserve cut interest rates for the first time in more than 4 years.
Big topic this week. And David Hochberg is the Vice President of Mortgage Lending at Team Hochberg at Homeside Financial and the host of Home Sweet Home Chicago on WGN Radio. Hear it on Saturday mornings. And he's here to update us on what's happening in the mortgage industry now that these rates have dropped. Thanks for being here, first of all.
Well, thanks for inviting me.
Yeah, so we watched the rates kind of tick down, and then this happened with the Fed. And, you know, what was the immediate impact, and what kinds of calls are you getting into your office now?
Yeah, what the viewers don't really understand is that the mortgage rates have been coming down for the past month. We've seen about month, 6 weeks, so we're down a full point in the past 6 weeks in the 30-year fixed. So 6 weeks ago, we were in the sevens. Now we're solidly in the sixes. So what does it mean for your viewers? It means, number one, your home equity line of credit payments are going to be cheaper. Your interest rates on your credit cards, your credit card minimums are going to be cheaper.
And that's without doing anything,
right away.
Right.
Boom, Fed Chair Powell said we're cutting it half a point, bammo, it went right into effect. You go get a car loan, car lease, you're down a half a point. Now I had a viewer go, well, yeah, it's only half a point. I'm like, hello, right? I mean, we've been getting our heads beat in here for the past 30 months with increases. We have to get the first one out of the way before we get to the second one. So let's take the win, check the box, and then keep it going down. So that's Fed Chair Powell basically said he's got another cut coming before the end of the year, and I've been doing this for 24 years. Typically, as we come down, like we went up like a rocket ship. Now we plateaued for 30 months, which is the longest I've seen it. Now we're on the way down slowly and gradually, which is good for the economy.
Okay, so the big question for a lot of families at home, because their mortgage is sort of the big expense that they could really
100%.
save some good money on. And I think everybody's trying to catch that interest rate at the right time. And how do you time it? What should you be doing? Should you be waiting right now, or just go with what we've got?
Right, I get that all the time. Well, I think it's going to go down further. I said, okay, if you could refinance today and I could lay two $100 bills in front of you every single month, and we could cover your closing costs with a slightly higher rate, not get the lowest rate where you're paying thousands of dollars in closing costs. If I could lay $200 or $300 or $400 in front of you every single month, are you going to wait until you think when rates are going to go down in the future because you have got your pulse on the market like that? No, you take the win. I truly believe, this is the first time I've said this in 3.5 years. I always would say as rates were going up, we got a better chance of hitting sixes than we do fours again. We got a better chance of hitting sevens than we do fives again. I truly believe, after all the indicators and the experts I follow and everything I've read, we have a great chance of getting to the back into the fives within the next 6 to 9 months. So take the win today. Anybody that's bought recently in the past 30 months, okay, who's in a rates in the 6 or the 7s, get ready, get prepared. We have borrowers in the 8s that we are now in the process of bringing back and refinancing, covering their costs and getting them into a better rate. The number one cost of housing right now is your mortgage. Right? You've got gas, electric, heat, but mortgage is the number one.
Really depends on like what kind of gambler are you, right? And what do you think that this is going to do overall to the housing market now that the rates are coming down? Will you see more houses get listed, more people moving into homes because it's more affordable?
Well, sure. Well, a couple things are going to happen. All the people that went in the basements and into the couches when they got knocked out when the rates went in the 7s are now back in the playing field. So as the rates get back in the 5s, everybody that got knocked out when they hit 6s are going to come back in the playing field. The other thing it's going to do is we haven't seen an adjustable rate mortgage in a mass capacity since 2019. Okay, so as the rates come down and the market stabilize and get back to normal, we haven't been in a normal market in 4 years, you'll see adjustable rate mortgages. Those homeowners that are in their 2s, 3s, and 4s, 70% of American homeowners that have mortgages have a rate under 4%. Okay, but as those rates come down, they've built a ton of equity, Ray. The past 3 years, they've built a ton of equity. So as the rates come down, they might not like that 5, but they'll be looking at, hey, you know what? I got 3.5. 5's not that big of a stretch. And that ARM that we haven't seen in 4 years at 4.75 or 4.5 with the $200,000-300,000 I just made with added equity I picked up by just getting up and showering, brush my teeth every day. Let's go, right? So you'll start seeing a flow of properties coming on the market, and it's supply and demand.
So
right?
more inventory.
More inventory will come up, and people will want to move use the built-up equity to either pay off debt, cash out refinance, or use that equity to either buy a bigger home, downsize, move out, retire, and move to another place, or buy a second home.
Yeah, people finding out where that tipping point is, right?
Yeah, a lot of activity. It's great. The phones are finally starting to ring, and it's been a lonely 30 months. But it's good. We're back.
All right.
Yeah.
Thank you so
Thanks for having
much.
me, guys.
David Hochberg, you can catch his show, Home Sweet Home Chicago, Saturday mornings from 10 until 1 on WGN
Be
Radio.
an expanded conversation that we just had now, right?
Yeah,
And
yeah,
that's
a lot
gonna
to
be
talk
big
about this
topic.
Saturday tomorrow. Yeah.
Thank you,
Thanks,
sir.